Welcome to How to Create a Strong Marketplace Business Case, a Marketplace Best Practices event. Today's event is a virtual fireside chat format that will be concluded with an open Q&A. Please enter any questions into the Q&A box and we'll do our best to answer. Any questions we are unable to answer will be followed up upon to the best of our ability. This session is being recorded and both the on-demand version and the presentation deck will be provided to all attendees in a follow-up email along with additional useful pieces of content. This event series is based upon the Marketplace Best Practices book, a 477-page guide for marketplace operators that has reached #1 status across 3 categories on Amazon. For a free print or Kindle edition copy, please email info@mcfadden.com. I'll now turn it over to our host for today's session, Mark Brohan, Senior Vice President, B2B and Market Research at Digital Commerce 360. Mark?
Thank you. Thank you, and thank you to McFadden for having us today. So, as the folks just mentioned, we're Digital Commerce 360, and we're a journalistic research firm that's been looking at e-commerce on both sides of the ball. By that I mean business to consumer and business to business ever since the whole concept began some 20 plus years ago. I will do a good job of aging myself because I go back to the very beginning of all this. So I've seen a lot of things pass along the tracks, water under the river. But in the course of our coverage, our daily coverage and our research and our news events on Digital Commerce 360 B2B, we follow B2B marketplace trends extremely closely. And my colleague Paul Demery and I have been doing so ever since B2B marketplaces first began. I mean, we go back to the very beginning, and I'm talking 1999, when some of the biggest companies on the planet tried to launch marketplaces within their industry, and it was the classic case of a great idea whose time was absolutely wrong. So that's not to say that some marketplaces didn't make it. There are many today that in aerospace and healthcare and automotive that have been quite well and thriving, but for the most part, there's a lot of dinosaurs that are in the boneyard, and we're there. So over the course of about 2 decades, what transpired was that marketplaces on the B2B side, they were there, but they were kind of a niche outlet. Well, I think most of our attendees today have the memo, which is the pandemic and supply chain disruption just changed all that. And what's resulted in the last 2.5 years is the fastest growing e-commerce channel that we at DC 360 and me personally, who's been charting the market for 20 plus years, have ever seen. And that's because it wasn't just because the pandemic set things into play. What it did, it changed the dialogue for who's buying online. So today, marketplaces last year about a $56 billion business, which in comparison is about 3% of total e-commerce sales of say 1.6 trillion. Now, on the face of it, those marketplace numbers might be not that impressive, but if you look at the context of it, that is 0 to 3% of total B2B e-commerce market share in less than 2 years. This year, by our count, for our forthcoming Digital Marketplace 400, of which we thank McFadden for being a sponsor of that, we are estimating that marketplace sales on the B2B side will excess about 130 billion, more than double, probably approaching 4 to 5% of total B2B e-commerce transactions. And that growth, my friends, is quite phenomenal. So half the business, of course, is driven by one market gorilla, Amazon Business. We'll talk about that a little bit and dissect that. But the takeaway here is this is not a fad. McFadden, she's a play on words. This is the fastest growing digital sales channel on the B2B side. It's mainstream, it's going to do nothing but grow. And so to kind of give you a primer on where all this is headed and how to kind of break down the opportunity here and the game plan and the right way to do it, please welcome Tom McFadden, author and CEO of McFadden Digital. So Tom, kind of walk us through what you're seeing these days.
Great. Thanks, Mark. Appreciate the intro and appreciate the opportunity to do a lot of work with Digital Commerce 360. Do great research. We're honored to sponsor the upcoming report and also to have spoken at the Envision B2B event 2 weeks ago. Lots of great examples of marketplace success stories there. So I'll go through our agenda, then I'll just jump into one quick slide about McFadden Digital, and then we're going to get into the real meat of the presentation. So our agenda for today about how to build a strong marketplace business case. Mark will go through some digital customer expectations and the role that marketplaces play in that. I'll talk about some of the fundamentals of the marketplace model and some business case considerations, or that's where we're going to get deep dive into the bulk of the content, from the financial model, the organizational design, the key success criteria, some of the metrics and performance management of a marketplace. Then we'll talk about some examples of marketplace success, kind of show some of the people that did win using this business model, and open it up to audience Q&A, as Tom Gato said at the beginning. So first, the one slide about McFadden. Go through this kind of quickly, but we've been building large-scale e-commerce and marketplace solutions for a long time, approaching $10 billion per year of GMV on some of the sites. About a dozen of the sites do over $1 billion a year. Pretty much every dimension of large-scale e-commerce and large-scale marketplace, we've pushed that dimension. We're also experienced in doing this. The company's been around for 35 years, serving more than 10% of the Fortune 500. We've been building e-commerce solutions for almost a quarter of a century, attending many of those early days internet retailer conferences where Mark was one of the key leaders. In 15 years building marketplaces, again, generating billions of dollars of gross merchandise value. And we're a global organization, onshore, nearshore, and offshore, operating in India almost 2 decades, and in Brazil nearly a decade. And we're also innovators and thought leaders. Mark mentioned our book, the Marketplace Best Practices book, 470-page book. We're happy to send you guys a physical copy of the book, or give you a code for a Kindle version of it if you're interested. And I'll reference some other thought leadership white papers that you can download throughout the rest of the presentation here. So lots of additional assets for your use available. I'll hand it back to Mark.
Thanks, Tom. You know, I'm just going to show you a couple of quick slides here that I think kind of frame the discussion for today's Commerce Chat, which is that if you look at one of the key demographics to look at for marketplace growth is user experience. And why is that important? Because businesses buy stuff online from all kinds of channels the livelong day, and increasingly across the board, as we all know, that is becoming more online than offline. And by online, I'm talking about e-commerce and EDI, yes, EDI, marketplaces, e-procurement. So there's several buckets that kind of make that up. But as I mentioned, the fastest growing channel that we're looking at these days is this B2B marketplace trend, because of who the users and customers are. So increasingly, what you're seeing is a much younger demographic from business managers, business purchasing teams, and procurement directors. I'll be 64 in about 2 years, and frankly, people my age are retiring. We are leaving the workforce. So what's happening is there is a whole new generation of procurement directors coming in, and you can't separate the demographics of who those new executives are from what they want, because it's one equals the other. So my point here is all those millennials, they're coming into becoming the main procurement directors, supply chain managers, or heading up the purchase team, because in a lot of cases, it's not one individual at these places, it's multiple people, about two to three people on average here. They are a digital first customer. And that shift in buyer behavior on the business side is manifested the most clearly in B2B marketplaces. So for here, what do users want? What are they doing? Our latest survey shows that across the board, users are buying they're buying much more online than they ever did before, even during COVID-19. So a few more slides to kind of back that up here. All right. So if you look at a very telling tale here, digital commerce is not new. I mean, e-commerce sites, apps are not new. Marketplaces, I mentioned, are not new. But if you look at what are the top 2 sites here, what are the fastest growing channels, where are these digital first buyers going, then look at marketplaces almost as wanting, as you will, as e-commerce sites. To me, that stat is completely telling, because that tells you where the buyers and the sellers across B2B commerce are going, and as e-commerce sites follow closely by the marketplaces. That's why this is such a fast growing segment here. Next slide, if we could. Okay, so yeah, everybody's gotten the memo that, the COVID changed the game on a lot of things. But here, if you look at the takeaway from my slide here is, marketplace on the B2B side at the very end of it is simply supply meeting demand. That's what drove the increase. It's still driving it today. So when traditional procurement sources dried up and folks across the board began looking for new and better places to find what they had to procure products, then you found people who had never in their lives thought about marketplaces begin to find that. So yeah, that was a trend coming out of COVID. But my point here is that trend today is continuing. And I gave you some numbers just a minute or so ago to kind of talk about the growth we're seeing across our marketplace report this year. So the opportunity for marketplaces here is that for companies to do this right, they saw the increase in probably marketplace sales and other e-commerce site sales come at them. Now, the trick is, how do you convert those first-time buyers who are now entirely digitally driven to become a permanent buyer? And the marketplace equation figures strongly into that. So with that, I'll turn it back to Tom to kind of walk you through the mechanics of what they're seeing. And then one final takeaway. Yeah, the big guys are still buying more, but across the board, my final stat here shows that a lot of interest across a lot of revenue models are looking at buying more, not less, on B2B marketplaces. So Tom, back to you.
Thanks, Mark. So let's first get a good understanding of the fundamentals of the marketplace model, and then we'll get into some of the financials, the organization, the category management, and so forth of how a marketplace operates. So an important differentiation is pipeline versus platform. Everybody hears the word platform, and it can mean different things in different contexts, but we're talking really about a platform economy, platform business model. And to explain that, maybe it's better to explain what a platform business is not. It is not a pipeline business. And pipeline businesses are traditional e-commerce, traditional retail, traditional B2B distribution. So it starts with this sequence of, it is a sequence of events that have to happen one after the other, very labor intensive, slow, because each of those activities can take quite a bit of time and require a lot of human labor. So first is usually sourcing goods from distributors or manufacturers, negotiating contracts. We've seen some of our clients where this can take 1 to 2 months, especially in the B2B world, negotiating contracts. Then you load the fairly cryptic data sometimes into the ERP. You may have a 40 or 80 character product description, which is not going to work for marketing. So the merchandising team will then have to take photos and add the SEO optimized description of the product to try to get traffic to that website and make sure that the customers can understand what the product actually is. The e-commerce operator sets the price. This sounds trivial, but it's actually a pretty important differentiation in the business model and some of the behaviors that it drives. So e-commerce operator sets the price. They hold the inventory both physically and financially, meaning physically you have to build out distribution centers, fulfillment centers to hold all the goods. And you also have to financially hold them, meaning you pay in advance to purchase goods from your capital. Then processing orders. This is typically automated, but still has to happen. And then fulfilling the order. So the warehouse staff have to pick and pack and send out to the parcel post or however the order is being delivered to the end customer when you get the money. So eight activities here have to happen in sequence, very labor intensive and very expensive to scale in a pipeline business. On the other hand, a platform business has just a couple of main labor categories, like somebody to recruit sellers and somebody to support the sellers, and then processing orders. That's again automated. So it's really those two main categories that you have to add with a marketplace. There are standard terms and conditions that apply to all of the sellers on the marketplace. So you're not negotiating new contracts with every new vendor that you work on. Now, those terms and conditions may reference lookups in like a commission table that says, for this category, the commission is 15%. For that category, it's 20%. For this category, it's 10%. If you as a seller, you must fulfill orders ship them within 48 hours of receiving an order. You must respond to customer queries within 4 hours. You must do this and so forth, all the standard terms and conditions. And that builds this network. The network ecosystem is a really exponential math. As you add another node, it's not adding one more connection. It adds a connection to, I think, factorial, all the different number of nodes on there. So it's more of an exponential style or logarithmic growth of the network connection between customers and the sellers. So The third-party reseller, simple third-party reseller may source goods from one distributor and sell it on the marketplace. You may have resellers, third-party sellers that source from multiple distributors, or you may have multiple third-party sellers that source goods from the same distributor. And this is where, again, the third-party seller sets the price. So these two sellers are competing against each other to win the buy box, meaning that their product is recommended when there are multiple offers from multiple sellers on one product or one SKU. They're competing against each other with the lowest price to win that buy box. This is part of what drives that flywheel of the virtual cycle of a marketplace. A lot of times these days, distributors are selling directly on marketplaces, and manufacturers even are selling directly on marketplaces. So the net result of what happens with that network effect and how it scales exponentially or logarithmically. So unlike pipeline e-commerce, which scales linearly, meaning if you want to double your catalog, you need to double your number of merchandisers. If you need to double your catalog and double your inventory, you need to double your investment in fulfillment centers and distribution space and warehouse workers. If you want to double the revenue, double the catalog, it's very linear. And that's both on the catalog size and the revenue of the business. Unlike platform businesses, because it's exponential, you can scale your catalog size, scale your revenue without massive or linear organizational headcount, cost expenses, and fulfillment space expenses. So let's look at different levels of marketplaces or marketplace maturity model. There's another white paper here you can download, McFadden.com/MMM, to learn more about the 5 levels of the marketplace maturity model, which is based on CMM, CMMI, the capability maturity model. If you're a software developer, you may know about that. So first-party commerce is that pipeline we talked about. It's those 8 sequential activities which have to happen in order. It's all the responsibility of the e-commerce operator, be it a retailer or a B2B distributor. Dropship is incremental, a small improvement on that. And of those 8 activities, you outsource 2 of them. So the holding the inventory and fulfilling inventory is handled by the dropshipper. So 2 of the 8 activities are outsourced to the dropshipper. So it's a minor improvement, but you really get that platform economy leverage when you get to a third-party marketplace, level 3 of the maturity model. And this is where you outsource, I think it's 6 of those different activities, 6 or 7 of those activities in the pipeline to third-party sellers. And you can vary it based on your business model, but this is really the platform economics come in there. Now you can still curate your categories and your products and manage the look and feel and what's being presented to your customers, manage the customer relationship and so forth. But a lot of that labor is outsourced. Level 4 is quantitative management, much like CMM. This is where the numbers or the metrics drive the business. And we'll talk a little bit more about metrics later because this is very important for scale. So you may have sellers, for example, automatically suspended if their rating drops below 3.5 stars. You may give them, charge them 1% less commission if they become a premium seller and rise above 4.8 stars. You may look at the data and say, well, some of our existing first-party goods that we stock makes more sense to move those into third-party sellers to fulfill. Or there's a third-party good that's selling really well. Look at the metrics and the data we're collecting from our marketplace. Maybe we'll bring some of that in-house for our e-commerce fulfillment, or maybe even bring it into our stores if you're an omni-channel retailer and optimize the physical store inventory based on the data you collect from the marketplace. Level 5 is optimizing. This is where you can really innovate with new business ideas, new process improvements, new automations. So an example might be offering a services marketplace, offering a marketplace for digital goods, for example. So on Amazon, you can buy a TV from a third-party seller, a physical good. You can have it installed by a third-party service person, come to your house and mount that big flat screen TV on your wall. And then you can watch digital media from the Amazon Prime Video, which is produced by a third party. So you can innovate in many different directions there. More automation, live streaming, international expansion, lots of different ways of optimizing once you're at that mature level of the marketplace. So we mentioned the virtuous cycle of the marketplace flywheel. Most people have probably seen the mock-up of the Jeff Bezos sketch he was coached on by Jim Collins, the famous business author. There are a lot of additional benefits that beyond that simplified flywheel diagram. And it goes in at the high level. I'll talk about the big concepts here. So you obviously get more products. With more products, you drive more customers. With more customers, you drive more sales. which drives more profits, as well as the third-party sellers are competing and you don't have that expense internally. That drives more sellers as you have a bigger customer base and more traffic to your marketplace. You collect more data. You can leverage that for a store assortment if you're an omni-channel retailer or a B2B distributor with brick and mortar distribution points. And you can also use that to drive more store traffic. And there are a lot of sub-bullets in here of some of the benefits. And we're going to talk about those benefits on a future slide, which brings us into the business case considerations and how you want to prioritize some of those business benefits of the marketplace business model. So we're going to start with a big picture of our methodology, marketplace enablement steps. And we break this down into generally 4 main stages of time passing from strategy to building out an MVP, minimum viable product, to a full deployment of the marketplace as a phase 2 or fast follow, and then the ongoing operations later. And we're going to have 2 swim lanes horizontally, strategy and business activities, and on the top in red, and then technology in black on the bottom. So what we're going to talk about today is mostly around the assessment and planning and the strategy. So strategy formation, some of the budget and ROI and financial model, success criteria, et cetera. We're going to look at this on the next slide. Then we'll also look at phase 2, which is really the business prep. Some of these things like seller terms and conditions, seller recruiting, metrics and dashboards, reporting for performance management. Then you get into full deployment and really expanding the business. We're not going to get as much into these later ones. The focus of this presentation is really about building the business case, which is the strategy up front, and a little bit of the business prep and business operations. So we're not going to talk too much about the MVP build and deploy and platform enhancements and the ongoing support and operation of that. Feel free to reach out to us if you want to learn more about these other the technology side of the equation, which we do. We've been doing these for decades, the technology side. But we're going to look at that first block, this assessment and planning, the strategy topic. And today we're going to look at 4 of these in deep dive. So success criteria and KPIs. Again, these are some of those elements of that flywheel. We'll look at the financial model, the budget and the ROI, some of the org chart and what you need to do for a business case, for business planning for the organization. And obviously an important part of launching a marketplace is selecting a tech stack, the appropriate software for that. In the next phase, we're going to just talk about one, which is the KPIs, dashboard designs, marketplace, which feeds into marketplace performance management. So that's from the first 2 major blocks of the methodology. Within each of these, we're going to look at a set of those topics, starting with the success criteria. So there are lots of reasons that people launch marketplaces. We couldn't fit all of them on one slide, but a lot of people look at different reasons. Sometimes it's just to grow the top line revenue, GMV and or revenue. We'll talk about the difference between gross merchandise value and revenue in a bit. But a lot of people are focused more on the margins, the profits. You have to be profitable, not just sell a lot of stuff at low margin. Which is more important to you? You can go deeper into certain categories. If you want to have, you're selling, let's say, cell phone cases, and you want to have all of the cell phone cases that are available, you go really deep in that category. Or maybe you expand in breadth into adjacent categories that could be good cross sells, or enter entirely new categories that may be outside of your core business. Of course, the inventory carrying and fulfillment costs are major expense for e-commerce, retail, or distribution. During the pandemic, who didn't experience out of stock situations? A great example of this is masks. Etsy was a marketplace where a lot of hundreds or thousands of people creating masks started selling them on Etsy when you could not buy them at the retail stores or distribution organizations. You can expand into long tail, support B2B distribution channels. We've seen some great examples of B2B2C working very well. It's not channel conflict, it's more channel collaboration with the marketplace model. You can quickly test new markets. If it takes too long, if it takes you a month or 2 to negotiate contracts with your vendors and onboard them, reduce that down to a matter of days with the marketplace. You want to increase your average order value, be more nimble and test out new areas. You see data quickly, you can add a new seller on and have a new category launched within a week sometimes, if that's what you want to do, as opposed to what used to take months in the past. Obviously, we talked about how these businesses scale more quickly. You get better SEO. Perhaps you want to add a services marketplace on top of selling products. You want to sell services, meaning sell third-party services. And that can range from delivery services like Uber Eats or DoorDash, lodging like Airbnb, to installation services, to advisory, to experiences. There are all kinds of different services marketplaces. Collect more data and insights. The amount of data that you collect from a marketplace is really incredible. It's one of the highest value elements, but also very hard to quantify. We'll talk about it on the next slide. You can optimize your mix of first party or third party goods, something you do want to stock in your warehouse, something you want to have a third party seller manage, or maybe even do drop ship if you want to combine levels 1, 2, and 3 of the marketplace maturity model. That supply chain resiliency, if you only have one vendor for goods, it can be pretty easy to add on more third-party sellers to have a backup for some of those goods if they're critical for your customers. Again, we mentioned omni-channel opportunity to drive store traffic, and even have the sellers compete on price, so that a lot of times there's a reason why prices on marketplaces tend to be lower than on retail e-commerce sites. It's because of that competing dynamic of the third-party sellers. So lots of criteria or potential reasons to launch a marketplace. But when you compile your business case and present it to the executives or external investors, it's very important to have it clearly prioritized why you're doing this. And we can certainly help talk about different returns and benefits of different criteria here to work on. I mentioned some are more measurable, obviously top line gross merchandise value or revenue, margin, catalog size. These are easily quantifiable metrics. On the other side, just customer mind share and seller mind share. It's a two-sided ecosystem. So wanting to make sure that the customers think of you, if you're in a niche or a category and you want to dominate that niche, how much of that customer mind share or customer wallet do you own? Again, that's a little bit harder to quantify, but also can be very important reasons to launch a marketplace. Customer sat, the trends, we talked about how valuable that data is. If you can see what third-party products are moving really fast and starting a trend and jump on that before your competition, that's hugely valuable. A little bit harder to quantify onto a ROI spreadsheet, but certainly there's some important elements there. Your brand footprint on the internet. If you are the destination for breadth or depth in certain categories or types of sets of categories, that can mean a lot to your brand. Again, some more quantifiable or measurable than others. So let's take a look at the economics of e-commerce versus marketplace. I mentioned some of these things are different, like setting the price. On e-commerce, traditional e-commerce, this applies to retail or distribution, even retail that's been around for millennia. The e-commerce operator or the retail operator would set the price for a good, and then your cost from a supplier is C. You do subtraction there, and you get your gross margin. Pretty simple. Buy low, sell high. The approach has been around for centuries, millennia. The marketplace model is a bit different. So the seller sets the price, remember? So they set the price. Let's say it's $100. You charge, let's say, a $20 commission fee. So your gross margin is $20. And you're essentially helping others sell and take a slice of the pie versus buy low, sell high. Help others sell and take a slice of the pie. So what this means, GMV, gross merchandise value, is the same. It's a top line number, which is also the same as your revenue in retail and distribution and e-commerce. The top line revenue for GMV are the same. However, in a marketplace, the GMV, the top line number, is the price set by the seller, the total order value, but your revenue as an operator of a third party sale is actually the gross margin. So some people might see smaller revenue numbers in a marketplace model than they'd see in an e-commerce model. But the value is that your gross margin tends to be much higher. And that's been proven out by many of the marketplaces. So where does that revenue come from? We talked about commissions, which is this $M. That's just only one of the ways to monetize a marketplace. So your ROI equation, your revenue on top divided by your expense. And this is a simplified equation. Obviously, it's not exact accounting math here, but the commissions can be that percentage, as I mentioned. That can be a table that varies by category, for example, or seller rating or seller type. You can also have subscription fees. So this can be, it's $29 a month to be a regular seller on our account, on our marketplace, or $59 a month to be premium seller and have a 2% lower commission and get featured on the top of the search results. There can be listing fees, like on eBay, it costs a few dollars just to list a good, even if it doesn't sell on the marketplace. There can be lead fees, lots of different ways of monetizing the transactions from the sellers. A big area that some of the larger marketplaces are really monetizing now is advertising. So retail media networks, RMN, retail media networks are a huge, fast-growing area. Amazon did $31 billion of ad sales last year. A lot of the bigger retailers like Kroger, most of the grocers, some of the big retailers are selling advertising to the manufacturers and brands. Instacart's a great example where they sell advertising to the CPG brands that they want to have their goods focused when end customer buys groceries on Instacart, and really giving more power to the CPG brands than the grocery stores by selling ads to the CPG brands. All types of advertising as well. You know, it seems like every month Amazon comes out with a new way that the sellers can advertise with them. Lots of other ways of monetizing it as well, from fulfillment like FBA. Walmart has a similar fulfillment, selling the data, other types of lift that you'll have in your business, perhaps optimizing your other sales, your cross sales, your in-store revenue. And then some of the expense we mentioned, like the staff, you have to hire fewer distribution center workers, fewer merchandisers. You don't have as heavy of an investment in fulfillment centers. So it's a capital light business model. I'm not going to deep dive into the financial model, but at a high level, again, we're looking at three types of revenue here: the annual commissions, the membership or subscription revenue, and then advertising revenue. And then each of these, you can break that down based on different metrics to work out your 5-year financial model for your business case. And of course, you have to deal with the expenses from the software, the implementation costs for the software, your internal staff costs, your marketing. You have to market to also to and recruit sellers. So remember, that's another area. Then of course, you break that down into your profit and ROI model, which we can certainly help with that. Let's look at the organizational staffing. So as your marketplace scales or grows, you know, year one, maybe you have 10 to 100 sellers. It's a pretty small marketplace, adding 1,000 or 10,000 SKUs, adding less than 10 million of GMV. Maybe you get by with one marketplace manager, 2 seller recruiters, people bringing sellers, finding sellers to onboard, and then seller support team. And as you grow, again, this is not linear, this is really exponential. So if you get up to $250 million of GMV, you don't have, if you have 250 million of GMV, you do not have 250 times the headcount that you did at 1 million of GMV. It's definitely not linear. So it's much substantially lower organizational staff, but obviously this is something that needs to be put into the business case and the business plan. We talked about tech stack selection. So you'll need to select a marketplace platform. And this is if you have an existing e-commerce system, this may be an add-on, a pure play platform. Here on this horizontal axis, we're going to look at the marketplace maturity model, from doing first-party e-commerce to dropship to the third-party marketplace model to quantitative management and optimizing the more mature marketplace. So there are some pure play platforms, marketplace platforms that really do the 3P marketplace and the more mature or more sophisticated capabilities. And you can marry that with an e-commerce platform. This could be, Magento, Salesforce Commerce Cloud, Commerce Tools, other, or Shopify, plus some of the focused just e-commerce platforms. There also are some full stack vendors like VTech, Spryker, UltraCommerce that offer combined customer-facing e-commerce plus seller-facing marketplace. And they go up in different scales as well. So looking at a $10 million GMV, $100 million GMV, or $1 billion GMV, and corresponding increase in SKU count, seller count, and budget for implementation. We have a very detailed, I think about 30-page report that goes into 7 different vendors. If you want to learn more about that, marketplacesweetspot.com will give you that full report. And McFadden Digital can also help in vendor selection and tech stack selection, going through that process with you. Lots of details and the ins and outs of each of the platforms. So let's look at the last subject we're going to talk about, which is the marketplace performance management. Once you have those KPIs defined and you want to really optimize your business, much like with CRO, conversion rate optimization for e-commerce, you'll have a dashboard of some of those KPIs that are really relevant to sellers. And some of these are relevant specifically to marketplaces. And you'll have the same things that you can do in your customer facing marketing and levers you can pull to tune the engine, like for your buyers, your customers, how much you spend on SEM, if you're B2B, how many sales staff you have, your email and social campaigns, your payment options, so forth, to attract and drive more buyers or customers. But what's new to most people that launch a marketplace, even if they've been running e-commerce or retail for a long time, is the seller facing levers that you can pull or push. How much are you investing in recruiting sellers? How tightly are you curating the catalog, the categories, the content that your sellers onboard? Is it Wild Wild West like eBay is, or is it a highly curated luxury fashion site that wants to highly maintain its brand? What's your commission rate? If you lower the commission rate, how many more sellers will you get? It's really some elasticity testing available in that, is same as advertising if you're offering that to your sellers. And my last slide before I hand it back to Mark, actually before we talk about some of the marketplace success, and then I'll hand it back to Mark, is looking at the business model of oil. Just use this as an analogy for now about how you extract oil from different sources, you refine it to turn into something else, and there are different points of usage for it. Well, data is the new oil, and marketplace performance management is really critical to optimize the marketplace. And we have more information about this at McFadden.com/MPM. So you can source your data extracted from the e-commerce system, lots of different e-commerce systems. You can extract it from the marketplace system. Different data comes out of those sources of information. If you probably use Google Analytics or Adobe Analytics or other web analytics tools, you source information from there. You pull in your payment information as well, and tax information. Lots of other data sources also that can be refined through this data ingestion, harmonizing it from multiple sources, visualizing it, and getting more advanced into predictive analytics and prescriptive analytics. And then that data can be used for your curation, expanding into categories. Is this a good category to expand? How have the products been selling? What's the margin? What's the velocity of those? Where should we do more seller recruiting? What's our liquidity rate on our marketplace? Should we convert some first-party stocked goods into third-party seller-fulfilled goods, or vice versa? Are there fast-moving, highly profitable third-party seller goods that we want to bring in and have our own inventory of somebody else's, or even white label that? Use this data to manage your sellers as you recruit or suspend or promote or do other activities with your sellers, including also the finance. How are your commissions working, the listing fees? Should you change your ad fees or plan out your budgets based on that? So a lot of ways in which you can leverage this marketplace data with the MPM, Marketplace Performance Management Solution, into your marketing and other areas. But again, such a huge amount of data is highly available from marketplaces. It's really a major driving factor for a lot of organizations that launch a marketplace. So definitely want to take advantage of that. Now we'll talk about some examples of marketplace success. I'll go through a couple slides and hand it over to Mark. So the biggest online retailers, 10 out of 10 of them globally, operate a marketplace. Alibaba being the biggest globally, Amazon second, and a lot of other Chinese marketplaces, JD and Pinduoduo, generating quarter trillion up to over $1 trillion for Alibaba of online GMV. In the US, 9 out of 10 of the biggest online retailers operate a marketplace. Amazon being the biggest, now at about, this is a little bit old data, about $500 billion of GMV for Amazon in their marketplace. Latin America, same story. 9 out of 10, the biggest retailers operate a marketplace. Mercado Libre is the dominant player down in Latin America, much like Amazon is for the North America. It's not just the big guys, though. Of the biggest e-commerce unicorns, meaning companies that are over $1 billion in valuation, but not public, the private companies, 8 out of 10, it's actually 9 out of 10 now. Fanatics just launched an NFT marketplace. 9 out of 10 operate a marketplace. So the fastest growing startups also leverage the marketplace model. And In the retail world, it's not just Amazon and Alibaba. There are lots of companies selling over $1 billion of GMV, $500 million, $250 million, and the list goes on. DC 360 has great resources for information about marketplaces. Let's look at some of the disruption that some of these players have marketplace operators have done. This is an interesting graph based on some McFadden digital research. So the horizontal axis is the years in business of these grocers, ranging from 75 years to 150 years. And the employee count is the vertical axis, from 100,000 to 500,000 employees. And we see market caps of or valuations of these businesses from 7 billion to 36 billion. Well, less than 10 years ago, along came Instacart, and in 10% of the time, with 5% of the staff and with no stores, this marketplace developed a larger valuation than any of the other grocers out there. Again, that's actually a four-sided marketplace. It has your goods from the grocers. It has the customers that are buying. It has the CPG brands I mentioned that are buying advertising to promote their goods on Instacart. And you have the services marketplace of the gig work delivery people or personal shoppers delivering the goods. So four-sided marketplace. Lodging, it's very similar. The horizontal axis, 50 to 100 years in business for all the hotel chains, 100,000 to 300,000 plus employees, market caps of 9 to 50 billion. And the number of rooms here is also shown for these hotel chains. Well, less than 10% of the time ago, Airbnb came along, and with just a couple percent of the headcount of those hotel chains has a higher valuation than all of the other hotel chains combined, and they offer more rooms than all of the other hotel chains combined as well. So obviously the marketplace model can be very disruptive. Next, I'll hand it over to Mark to talk about marketplace investments. This is actually a slide prepared by Comcap LLC, an investment bank that focuses on marketplaces. Great investment banker if anybody's looking for fundraising. Aaron Bowling's a great guy over there. Recommend connecting with him. But I'll let Mark talk about some of the investment he's seen from the Digital Commerce 360 research.
Well, thanks, Tom. So, a couple of things just to recap. First off, is this mainstream business? Is this a mainstream digital channel that's going to be there for the long run? Well, the answer obviously is yes. And one way to kind of benchmark that is to kind of look at the money flowing into the marketplace movement. So today, it's not unlike the early days of retail e-commerce, right? It's the Wild West. What I mean is a lot of things get thrown against the wall. Some will stick, some will not. But having said that, we're kind of going through the trial and error phase with B2B marketplaces. But whatever we're going through, it's attracting a lot of money. My point is, B2B marketplace funding isn't just business, it is big business. So the question I just got from somebody not too long ago was, okay, you're saying it's big business here, but for how long? I mean, we've got a war going on. We've got, record high inflation. We've got, there was a conference board survey that came out last week where 60% of the CEOs that they surveyed are predicting a recession inside the next year as the Fed continues to raise interest rates. But the question is, to me, was, well, gee, is the money spigot going to turn off for doing these kind of investments? And the answer is, the short answer is no, but the metrics of how things will get funded will shift. But Tom showed a couple of numbers, so I've got a couple of follow-up ones. Of course, there's different sources, but last year there were probably 119 B2B marketplace fundings of note, meaning above 50 million to as much as 500 million. So, big money flowing there, 119%. So far in 2022, that number is on track to be about the same. So if you want the scorecard, last year 119, this year so far, that same size deal, 50 to say, 500 million, 62 so far, or 59% of the growth rate from last year. So yeah, my point is that metric shows that this can be sustainable. But what's happening is more and more marketplaces are coming on board. The stat I like to use and was using last year was that when Paul and I first began charting all these guys, we found 70 that were kind of there for, they were there 70. As of last year, our list was 250, and I could have capped it going way beyond that. This year, it's at least 400, and it's probably much more beyond that, could be as high as 700. So a couple cases in point. Traditional markets that never had this stuff before are now hotbeds for it. A conventional market, an old school market, an old economy market that's taken up the mantle of B2B marketplace growth, chemicals. 12 different chemical marketplaces, and of course, they come in all iterations of size here. Will some make it? Will some not? I don't know. That's for the chemical buyers and sellers in that market, in that particular industry, to kind of find out. But for now, if you're looking for a marketplace in key industries like that, one example, steel. There are two deals that just closed, financing of 20 million. Brysos being one, just in the last couple of weeks here. So you're seeing not just the investments flowing into the marketplaces here, but a couple of hot areas that are keeping an eye on is, yeah, I mentioned chemicals, but if you're looking at some very hot markets, if you will, one is labor market. Marketplaces for finding and sourcing labor are a huge area of investor interest, if you will. Other supply chain types of marketplaces are very hot with investors these days. And why is that? Because we're still trying to get to the bottom of supply chain disruption and procure product. And what does a marketplace do? It's supply and demand. So those are just two quick examples in a drive-by way of where we're seeing more funding, not less, flowing into new iterations of industries launching more, not less, B2B marketplaces. So the sum game, though, is e-commerce, in some cases, the business fundamentals tend to get skewed. What I mean is you concentrate on kind of building the top line to impress a lot of things, from buyers to, to investment capital to what have you. So business mechanics or fundamentals sometimes kind of go out the door, because all things are meant to, in this case, like in B2B marketplaces, grow, the top line, or as Tom referred to, the GMV. So not to say that that's not still a high metric, but basically what's happening, of those 63 deals so far that I just mentioned, or 59% of last year's total, what's shaping going forward is there's a lot of early stage investments still going on, but a lot of the bigger ones that are, say, 250 or 500 million up, they're going for later stage development for the funding. In other words, the marketplaces are not exactly new. They've been around. Now they've got a track record. And what investors are looking for are the business fundamentals. How well are they converting, the buyers and the sellers? What does profit look like? What's the GMV look like, as it were? But how well is it being funded is changing back to a closer look at fundamentals of what that business does. So will the market money dry up? No. Will it still be a record pace probably for this year going to next year? So far, the tea leaves say yes, but investors will get a lot more picky looking at business fundamentals versus just in early stage kind of e-commerce ventures, just the top line. So my summary point to the investment part of all this is that where a lot of marketplaces are seeing their funding go into, it's like, in other words, they've raised 50 or 100 or 150 million. It's not so much going after new buyer seller acquisition. That's part of it. But what you're seeing is that as these digital first buyers go to more and more marketplaces, what they want is a better user experience. And guess what? What that means is a lot of the cap money flowing into these marketplaces are going to add new features, like finance features, or more supply chain risk management, planning types of tools, if you will. So one of the trends that's going to come out of all this is that one of these days, marketplaces might be giving B2B distribution companies a run for their money, and who is going to get that digital first buyer. So watching the money flow in is a good indicator for all this is going to shake out in the next few years. It's going to be a lot of fun. So Tom, what do you think?
Yeah, absolutely. There's huge investment in it. As you said, the dynamics, especially with the stock market change now, is focusing more on the margin, which is a great benefit of a marketplace business model, not just the top line GMV. Of course, it's nice to see those top line GMV and revenue numbers go up, but the margin and profitability are even more and more important nowadays this year. Last slide before we go into Q&A. One of our partners, Miracle, did a marketplace study which found some really interesting data that the growth of enterprise marketplaces was twice as much as that of e-commerce businesses, pre-pandemic, during the peak of the pandemic, and now when the pandemic's slowing down, hopefully we're seeing the end of that. But in all those three different models, the enterprise marketplace growth was twice that of e-commerce. So it's the last slide. We're going to move into the Q&A section now. So maybe we'll open up the floor for Tom Gatos from McFadden Digital, who's probably been seeing some questions come in.
Yeah, absolutely. And thank you, gentlemen, for that informative discussion. It's generated an avalanche of questions, actually. We'll get right to it here. The first one that we're going to take is, how do you solve the chicken and the egg problem? Having a marketplace with no products and customers won't come, but sellers won't come unless you have a marketplace where there is customers. So what's the best way when you're putting together your business plan to kind of deal with that that chicken and egg scenario?
Great question. Great question. So it depends on where the business is coming from. If you're a pure play startup, you have to get your chicken and your egg. You have to order the two at the same time and see who comes first. So just kidding though. For traditional businesses that have an existing e-commerce site or other content, perhaps a content site that drive a lot of customers, that's where you can really scale quickly because you've got one half of the equation. It's usually the best way to attract both sides, the chicken and the egg, the sellers and the buyers, is to have some unique differentiator. So it can be content that people want. It can be a configure price quote for a complex product. It can be a great search engine for finding the right product or connecting the right people. It really depends on the industry or what you're selling, if it's a product, if it's a service, if it's B2C, B2B. But really you have to have a differentiator. If you're just moving boxes, you're not going to win the marketplace model. You have to differentiate somehow because Amazon and Walmart and Alibaba already can move boxes around. You have to add value to the equation, and that can be in a certain niche. If you have, for example, content in a certain vertical, or Mark gave the example of chemical industry. There are a lot of very successful startups. We have two clients in this space one active client now that build marketplaces for chemical industries. And there's so much information that's needed for that. It's so much unique shipping from, hazardous chemicals rolling down the road to mapping out the different suppliers and vendors and being able to provide that information with the additional hazmat fulfillment and the search criteria unique and specific to that. You're probably not going to order a tanker or truck full of chemicals from Amazon. It's a very unique area. Lots of little niches like that. Another one of our clients that was at Envision B2B, Bay Supply. They sell Bay Fastener. They sell nuts and bolts. It's fasteners. Everybody looks down on nuts and bolts and fasteners, but it's a very important industry. With the marketplace, they quickly scaled from 60,000 to over 300,000 SKUs, and they become the destination source for when people need to find a fastener for aerospace or marine or high volume or unique configuration or configure price quote setup. That specialty can differentiate them, and they can attract the sellers that want to list their products on the Bay Supply fastener marketplace, and the customers that know that's where they can go to get unique fasteners or specific ones or a high quantity of them through that fastener marketplace. Probably a long answer to a chicken and the egg question.
Just a quick follow-up on that, because there's two fundamentals here that answer kind of the chicken and egg question too, which is a lot of companies in the early going, they don't answer the question fully and settle for a partial answer because they don't do two things. They don't benchmark the competition to kind of see what's there and truly break down what a marketplace within their space may have that they may care to kind of analyze and frankly do a better job because they may have a different product mix, or they might have more buyers and more sellers, what have you. So there's that. The other thing to kind of keep in mind is how you attract these things is how well you serve that digital first customers. Here's a prime example. Go Trade Direct is an aerospace marketplace 4 years in, and they were taking on a $6 billion parts industry that was just mired in paper. To buy a jet engine, even used, it was about a 6-week process. Well, what they did and why they're prospering today is because what they made the experience a lot easier for buyers and sellers to exchange the parts, find the parts, not just do the transaction. In that particular type of marketplace, the certification that's got to go with all this stuff and all the paperwork is just crazy. So it could be, frankly, a 6-month process. I kid you not. What Go Trade Direct did was they employed a number of tools to kind of bring that down, where all of that support data that you need to certify the resale, they took that from 6 months down to 3 days, because they digitized the entire process. And guess what? That served the buyer, that aerospace parts buyer, in a way they were looking to be served overall, but more specifically on a marketplace. And that's what kind of put them on their growth track. So yeah, my question is the chicken egg question. See what sets you apart and what your customers want, and then you got something to kind of work on there.
Great.
Great. Thanks, Mark. And thanks, Tom. Great answers there. All right, we got some more questions rolling in here. We're coming up to the top of the hour, so I think we're going to wrap around a little bit. So if you have time, everyone has time to stick around, we'd appreciate it. If not, keep in mind the full recording of this will be going out, including the full Q&A. So a question that came in recently, actually, that I think speaks to the opportunities that's still presented out there in marketplaces, right? Especially when we talk about the early wave of it in some industries. What do you think about the lack of development of construction materials and services marketplaces? That's one of those underserved areas.
A good question. There certainly are some industries which have not yet leveraged the platform economy business model of marketplaces. And I think that's where a lot of the opportunity lies. There certainly may be some challenges there. There are other areas like highly regulated industries, healthcare, for example, but we're starting to see some new offerings coming out there. I think there are some transport marketplaces. In fact, I think 2 of the ones listed on that unicorn slide of the top 10 unicorns were B2B transport, which could be shipping construction material, all kinds of shipping as well. But in terms of like a lumber supply, a Home Depot or Lowe's, Home Depot does have a marketplace. I think Lowe's does as well, where you can buy goods from third-party sellers and have it delivered. That's generally more B2C to some small contractors. I think at the lumber yards and that higher volume quantities for commercial construction or the big home builders, I'm not as familiar with that space, so I can't comment too much on that. But I know that Home Depot does have a marketplace.
Well, I can give you a few specifics on construction, because I'm kind of a pack rat for research, both ours and across the e-commerce world here. So there was actually a study that was just done on the top 50 construction sites and similar types of tools, that type of thing. And the takeaway was that apparently, at least according to this survey, those folks weren't doing a very good job, because 50%, 1/2 of the survey users, rated their experience on a construction supplies marketplace to be very wanting. So there's a lot of unhappy folks out there in construction land, apparently going online and finding the experience they're not quite that they want and couldn't find. So once again, if you look at marketplaces that are making a difference, I'll talk about a marketplace called GearFlow. They come out of the business for a very long time. It's a family-owned business, but they are doing extremely well in the construction trade because, like I just mentioned, they went out, studied the customer base, really found out what those buyers and sellers wanted on the marketplace. They're doing just fine as one example of a marketplace, an industry where apparently online construction folks buying business goods and services aren't particularly happy. So yeah, it's how you get it right. That's what draws the customers, as well as the supply and demand. So yeah, that's when it's going to shake itself out, or else those guys won't be around for a while.
All right, thanks. That's a great answer.
I need to double check on the Home Depot statement. I'm pretty sure they have a marketplace. I need to go back and look at that one. I'm pretty sure they do, but I need to double check now.
All right, so we'll go one more question here. We're at the top of the hour. We'll go. This is a good one, I think, that pertains, especially with B2B, probably more so than with retail. But can I plan a marketplace without going through the planning of a traditional e-commerce site first? So can you go straight from not having e-commerce to being a pure play marketplace?
Certainly. So there are some of the vendors in that sweet spot report include commerce plus marketplace. So it is possible. You do need to have both sides of the platform there. So you need to be able to face a seller-facing marketplace platform and a customer-facing e-commerce platform. VTEX and Spryker and Ultra Commerce are some of the more popular platforms that combine customer-facing e-commerce and seller-facing marketplace and integrate them together. What we found is depending on your needs, oftentimes the pure play marketplace platforms like a Miracle or Marketplacer may have stronger capabilities on the marketplace facing side, like is typical with point solutions. Do you want to have a full stack offering that combines multiple things, or just a point solution that may be more best of breed, but only does one thing very well? So yes, it is possible to launch both. And a lot of marketplaces launch specifically that way.
And I think just to kind of quickly sum things up, if I understood the question correctly, it was, do I start an e-commerce site first or marketplace first? And I think if that's the core question, I think the answer is, it's up to the asker of the question to decide what do you want to be when you grow up. So I mean, you could launch something from scratch. I mean, traditionally people tend to launch e-commerce sites and then do the marketplace addition second, because they've got a customer base, they've got revenue, they know their industry, they've got the sourcing for the product, all the above. But if you decide that volume is where you want to be, and you've got a particularly unique idea that you think is well suited for marketplace for your industry, well then, develop that as your e-commerce model, and either do the site later or don't do the site at all. But it's kind of up to like, what do you want to do as an organization, and where do you think you're going to get the biggest growth from the fastest? If it's a marketplace, go that way. If it's an e-commerce site, go that way, and then have the marketplace. They're going to be around. They're not going anywhere. So they'll do nothing but proliferate.
And I think I answered that more from the technology viewpoint as opposed to the business viewpoint. So Mark kind of inspired some additional thoughts on that. So the question is, if you launch an e-commerce model, are you going to build out your own distribution center, fulfillment center? You could, of course, use a 3PL fulfillment operation for that. But a lot of organizations today, when they see the benefit and understand the benefits of the platform model, opt not to carry first-party goods, meaning they have to buy it, physically hold it, fulfill it, handle that full life cycle of those pipeline activities of becoming an e-commerce operator. So many organizations opt not to do that and to go straight for only for the platform business model. But again, it really depends on the business plan, and it's part of developing that business case.
All right, and I think that's where we're going to wrap it up here. We have some other questions that we will do our best, as long as you didn't ask them anonymously, we will be able to follow up with individuals here. If you have any further questions for us, please email us at info@mcfadden.com. Feel free to go to our website, check out our blog. We have a lot of content there. There's also marketplacesweetspot.com for the sweet spot comparison report of the marketplace platforms, and marketplacebestpractices.com. And be sure to check out Digital Commerce 360 for all your research needs. Thank you for joining us today, and have a good one.
Thank you.
Thank you.
Thank you.